Hello and welcome to the State of the Fleet Industry, a weekly video series produced by Automotive Fleet magazine and which is sponsored by Enterprise Fleet Management. My name is Mike Antich. I'm editor of Automotive Fleet, and today I'd like to examine what's occurring in the fleet industry for the week of June 28th, 2021. And one of the more noteworthy developments over the past several weeks has been this growing evidence from used vehicle resale data that seems to indicate that late model used vehicle prices are decelerating. And the key word here is decelerating. It doesn't mean that used vehicle prices are declining. In fact, used vehicle prices are still growing and they continue to remain strong, but the rate of price increases, the velocity of the increase has been slowing over the past several weeks. And I touched upon this in last week's State of the Fleet Industry video report. And this week, I'd like to take a deeper dive and examine what is causing this deceleration and what the future impact may be on the commercial fleet industry. And as we know, used vehicle prices are at record levels, primarily due to the ongoing inventory constraints in both the used and new vehicle markets. But to put today's market in historical context, we have to remember that used vehicle prices did collapse in March 2020 and into April 2020 with the close down of dealerships and in-person vehicle auctions. But since then, resale prices have been rising ever since. In fact, recently, there's been 20 consecutive weeks of increases in overall prices at the wholesale level. And these price increases have been occurring across the board for all vehicle segments ranging from compact cars, to trucks, to SUVs, and particularly robust is the used van segment. Altogether, the used vehicle market continues to experience strong buyer demand. But as I said, the rate of growth in wholesale prices is slowing, and this is showing up in data collected by J.D. Power, Black Book, and Cox Automotive. And we've heard similar anecdotal observations from other remarketers at the recent conference of automotive remarketing, also known as the CAR conference. Up to this point, there's been a steady record-breaking acceleration in used vehicle prices. For example, used vehicle prices climbed 10% in April 2021 and 7.3% in May of 2021. But we're starting to see a decelerating pace of growth in used vehicle prices over the past several weeks. And this has caused some people in the industry to wonder whether used vehicle prices may indeed be starting to peak. But even if used vehicle prices are peaking, wholesale prices continue to remain strong and are higher than same time last year. In fact, used vehicle price increases have been so strong that they've been responsible for 1/3 of the inflationary price pressures in the national economy based on data collected by the US federal government. And when was the last time that the used vehicle market had this type of an impact on the national economy? And to the best of my knowledge, the answer is never. And here's another way of illustrating the strength of today's used vehicle prices. Historically, used vehicles will depreciate on average 2 to 4% per month. And this is how leases are typically structured. But today, some high demand used vehicles actually increased, not depreciated in value, but actually increased in value 25 to 30% since January 2021. And this is really unprecedented. And in my assessment, there are 6 factors that have contributed to the increase in used vehicle prices that we're now experiencing today. And first is when the pandemic first started, many people stopped using public transit out of fear of virus contagion. And as an alternative, they looked to buy used vehicles for their personal transportation. Second, there were 3 stimulus checks issued by the US federal government that many people used as down payments to acquire used vehicles. And these checks have demonstrated that they have a tangible influence on the used vehicle market. So here's a for instance. The spring market this year in 2021 arrived around 7 weeks earlier than normal. And why is that? Well, there are a variety of reasons, but the primary reason is that the second stimulus check started to reach consumers in late January and February, and these were used as down payments for used vehicles. The third factor contributing to today's prices has been that the inventory of new vehicles available for sale has decreased primarily due to the initial OEM factory shutdown from mid-March 2020 to mid-May 2020, which was followed by the unanticipated shortage of microchips that continues to this day to slow the production of new 2021 model vehicles. And as we all know, this has caused an industry-wide shortage of used vehicles. And as a consequence, with the decreased availability of vehicles, this has caused many buyers to buy that same vehicle in the used vehicle market. So many traditional new vehicle buyers have now become used vehicle buyers, and they're generally more financially solvent and able to pay higher market-driven prices. So fifth, the fifth factor is that most used vehicle inventory that we anticipated to be in the pipeline never materialized. For example, one reason for the decreased inventory of used vehicles is due to fewer repossessions and fewer off-lease retail vehicles. And if you remember, in March of 2020, the prediction was that we would have a flood of repos in the third and fourth quarter of the 2020 year. But that never materialized due to the moratorium on repossessions issued by lenders and by governmental agencies. And likewise, we were supposed to have a flood of off-lease retail units entering the wholesale market by year-end 2020. However, this increase in inventory never made it to the wholesale market because high consumer demand absorbed this off-lease inventory at the grounding dealer. And one example to illustrate this is that typically the share of vehicles that are returned to GM Financial, one company, at the end of lease term is normally around 79%. This now decreased to 55%, and normally those units would have gone to auction. But more importantly, the used vehicle market is not a standalone entity. It's just one component of a larger automotive market. So for example, the dynamics of used vehicle pricing is very much influenced by what is going on in the new vehicle retail market, which likewise has been experiencing upward pricing pressures. And the average transaction price for new vehicles have reached record levels. And this continues to be due to strong buyer demand for new vehicles. And this is causing OEMs to reduce incentives to consumers because these incentives aren't necessary nowadays to sell these vehicles. The low inventory of vehicles is allowing dealers to sell models at MSRP, manufacturer's suggested retail price, and in some cases with premiums on top of that. So as an example, industry-wide in May 2021, 69% of new vehicle transactions were near or above MSRP. So what's causing this? The bottom line is that there's more buyer demand than there is vehicle supply. Dealers are turning inventory quicker than ever. And here's another example to give you an idea on how quick inventory is turning. 95% of the Toyota 4Runners are now pre-sold. So that means that 95% of all Toyota 4Runners are being sold before they ever reach a dealership. So while new vehicles may be selling above MSRP, consumers are willing to pay this price because the price increase is being partially offset for the higher amount that they're getting for their trade-in vehicles, which are also selling at record levels. And I learned a long time ago that predicting the direction of the used vehicle market is a risky endeavor, primarily because these predictions are typically prone to error because of the numerous uncontrollable variables that can impact the direction of the used vehicle market. So while today's used vehicle and wholesale market remains strong, everyone agrees that at some point, this just can't continue in perpetuity. At some point, used vehicle prices will become too high and demand will recede. And have we reached that point yet? Well, that's going to be determined in the coming weeks and months. But there are signs that there's pricing deceleration in the used vehicle market based on the resale data that's coming and being collected by third-party entities. And some are now expressing concern that the price of used vehicles may actually be peaking. But even if used vehicle prices may be peaking and prices start to moderate or even decline at some future date, resale prices have still increased so much in the past 12 months that no matter what it is, it'll still be considered a strong used vehicle market despite any short-term downward pressure on pricing. And there is one unknown future variable, and that is whether there's going to be upward pricing pressure on MSRP for some 2022 models. Now, when you look at used vehicle prices and new vehicle prices, there's always a measurable difference in price between the two. And this measurable price difference tends to be in lockstep with one another. If new vehicle prices do trend upward, so too will used vehicle prices. And as they say, a rising tide lifts all boats. But until then, I'd like to conclude my State of the Fleet industry for the week of June 28th, 2021, and would like to thank you for listening.